Exercise 5-22, Journalize purchase transaction from Invoice. Durable Tires uses a perpetual inventory system. Durable Tires received the following invoice from a supplier, Auto Parts Distribution, Inc. So we can view the invoice here. And then we have to figure out what's going on. Now, most accounting homework problems give you the transactions like this. They just tell you exactly what's going on in a short sentence or two, but that's not the way real-world accounting works. In the real world, you're going to get an invoice like this, and you have to figure out what's going on. So we are Durable Tires, and then our supplier here is Auto Parts Distribution. So it looks like Auto Parts Distribution is sending us this invoice, and we can tell this invoice is sold to us because it says sold to Durable Tires. And then payment terms are 2/10, so 2% discount if paid within 10 days, and then net 30, so after the 10 days we would owe the full amount without discount. So it looks like we bought some tires here, some different kinds here, for a total of $9,209.60, and then there is no shipping. And if there was shipping, it would show up here on the invoice, and then it would become part of the cost of inventory. So over here I have my Excel T accounts here, so this is just my scratch paper for the purposes of this video. So at the top here we have our accounting equation, which is assets equals liabilities plus owner's equity. And then we have the T accounts here, the merchandise inventory, which increases on the left side with a debit. And then we also have accounts payable here, which is a liability and increases with a credit on the right-hand side. So for our first transaction here, for requirement 1, we journalize the transaction required by Durable Tires, that's us, on September 23rd, 2025, round numbers to the nearest cent. Assumed tires are purchased on account, so that's accounts payable, have that right up here. Record debits first, then credits, select the explanation on the last line of the journal entry table, enter numbers to the nearest cent. So we purchased inventory, so our inventory, merchandise inventory, is going to go up by this 9,209.60, so that will be with a debit. So if we want to, we can enter that in first on our scratch paper here, for the purposes of getting the balance for the inventory later in the problem. And notice we are using cents in this problem. We are not rounding to the nearest dollar, so that's why we're including the 60 cents there. So let's go ahead and input this inventory for our debit then on the actual problem with a debit to increase that inventory. And then our next clue is that we purchased these on account, so that means our accounts payable is going to go up. And again, accounts payable goes up with what? With a credit. So that's going to be for that same amount of 9,209.60 cents. And so we're going to include that here in our actual problem. So accounts payable, auto parts distribution for 9,209.60. And then we are going to need an explanation here. So we purchased inventory on account. So let's go ahead and check our answer. Well done. So now for requirement 2, journalize the return on Durable Tires books. Again, that's us. We're returning some tires on September 28th, 2025 of the D39X4 radials. That's these first set of tires here for that 1,520.48. Which were ordered by mistake. So we round numbers to the nearest cent, record debits first, then credits, select the explanation on the last line of the journal entry table, enter numbers to the nearest cent. So I'm going to go ahead and take this 1,520.48 cents and include it as the debit and the credit, and then we're going to talk about which accounts we are using for this return. So when we do a return, we no longer owe this 1,520.48 cents. So that means it has to be removed out of accounts payable. And so how do we decrease that accounts payable, our liability that we owe for these tires? We have to debit it. So we will go ahead and include a debit for $1,520.48 to lower our payable there. And then we are also going to need to lower merchandise inventory because we are returning those tires. So that's going to be with a credit. So that means, again, accounts payable will be our debit, so we are no longer owing that amount here of $1520.48 since these tires are going back. So we are returning them, which means merchandise inventory is going to go down with that credit. So you'll see that there. So we'll need an explanation then at the end here, and it is return inventory to the seller. And seller is also known as vendor, so they included that in parentheses. Let's go ahead and minimize this and check our answer. Nice work. All right, so now for requirement 3, journalize the payment on October 1st, 2025 to Auto Parts Distribution, Inc. That is that seller, again, that sold to us. So round numbers to the nearest cent. Record debits first, then credits. Select the explanation on the last line of the journal entry table. Round all calculations to the nearest cent. So that means we are going to be paying off what we owe in accounts payable. And the easiest way to do that here is to go to our T account or scratch paper here and see what the balance is left over in accounts payable after that return. So we have $7,689.12 that we owe, and since we are paying it off, we need to remove that from accounts payable. And again, how do we lower accounts payable? We have to debit it. So we're going to have accounts payable then as our debit for that $7,689.12. So again, that's our first account here. So accounts payable, we are paying off that amount. We can copy and paste if it'll allow us. Perfect. So now let's figure out whether we qualify for that discount and whether we get it. So our payment terms, we get 2% off if it is paid within 10 days. So let's see, we're here on October 1st and we did the purchase on September 23rd. So how many days is that? That is 8 days. So that is within that 10-day period. So that means we will be getting the discount. So let's calculate that discount on what we owe, $7,689.12. So we'll go ahead and type that in and multiply by 0.02 as 2%. And that gives us $153.78. So that is going to be our discount. So then in order to see how much cash we paid, we have to take what we owe for accounts payable less this discount. So what we're going to do then is clear this out, take $7,689.12, subtract out $153.78 discount, and that's going to mean we are paying cash of $7,535.34. So then our cash is going which way? It is going down since we are paying this. So we are crediting cash for $7,535.34. And then our transaction does not yet balance. You'll notice debits do not equal credits yet. And so we will need a credit on the right-hand side of $153.78. That discount on the right side. And then what account do we put this credit in? Well, this credit is going to go to inventory. So that's going to be merchandise inventory here. And then to show you what that looks like on our T accounts, anytime we pay early, we get a discount. It lowers the cost of inventory because how much did this inventory really cost us? It cost us $7,535.34. Then watch what happens if I get rid of that discount here. It becomes $7,689.12. But again, it actually cost us $7,535.34. So that means we have to credit the merchandise inventory to get that balance correct because we paid within that discount period. And then another way to calculate the cost of the merchandise inventory is to use this formula here. So that net cost of inventory purchase, which I just talked about, we have to take the purchase cost of inventory, which was that $9,209.60, minus the purchase returns and allowances, so minus $1,520.48, and then minus purchase discounts, which was the $153.78. And then there was no shipping, no freight in, so we ignore that portion here, but that would give us the same balance of $7,535.34 for the merchandise inventory. So now lastly, we are going to need a description here for this part of the problem, and this is paid within discount period. So we will go ahead and minimize this and check our answer. Well done.